Hello there, this is binaryoptions.net.au and we are looking at the Australian dollar, US dollar in the series of how to trade a currency pair. We've covered so far the Euro US dollar, Great Britain pound US dollar Canadian dollar of course, and it is time now for the Australian dollar and US dollar. The thing is that this currency pair is, let's say, extremely dependent on two things. Number one, China. And you can put that with capital letters if you want, as this is extremely important for the Australian dollar and the US dollar. First of all, the Australian economy is heavily dependent on what is happening on the Chinese economy, as more than 30% of the Australian exports are going to China. So you should watch out all the data that is coming out of the Chinese market, like GDP, PMIs, and so on, inflation, moves on rates, and stuff like that, as the Australian dollar, US dollar will move aggressively. The second thing to take into consideration is the fact that the Australian economy is heavily dependent on commodities. What does it mean? It means you should keep your eye on the gold market, on iron, platinum, whatever. All these commodities are influencing the Australian dollar heavily. It is one of the biggest exporters again of gold, copper, iron, and so on and so forth. The central bank in Australia is being called RBA, or the Reserve Bank of Australia. Now the Reserve Bank of Australia is meeting on a monthly basis, so RBA, or Reserve Bank of Australia, it is meeting on a monthly basis and it is setting up the interest rate, but there is no press conference to look at after the monetary policy decision. So that is a difference when compared with the ECB, where the interest rate is being followed by 45 minutes later by a press conference, or in the United States every 2 or 3 meetings there is a press conference, and here it is not, but it will be followed 2 days later. So the first Tuesday of each month and 2 days later there is a press conference with the details regarding the reason for the decision taken. Then of course Chinese data like the PMI, the GDP, any release that allows traders to make an educated guess regarding what the Chinese economy will do will be extremely important for the Australian dollar and the US dollar. What next? We said commodity prices, of course. Then the CPI is extremely important, like any currency pair. Any currency pair is moving based on the interest rate differential. What is an interest rate differential? Well, the difference between the interest rates of the two currencies it represents. In this case, it is Australian dollar and the US dollar. So CPI, or the Consumer Price Index, is the name of the, let's say, most important thing for moving the rates. This is inflation. The CPI inflation is, the CPI in Australia is being released on a monthly basis as well, but there are also some other indicators some other data, for example, annualized and so on and so forth. Look for PMIs as well. In Australia, PMIs are coming in for the services sector, for the manufacturing, but also for construction. So PMI for services, manufacturing, and construction. It means that even the construction sector it is being viewed. I would say that this is a similarity that is shared by the UK economy and Australian economy, as construction sector is being viewed only there as or only in UK as a separate part of the PMI. In other parts of the world, like the US or Eurozone or Canada, construction is being included in one or the other PMI as well. But the general interpretation is the same. The PMI, the 50 line, bull bear line, nothing different. Of course, look at the GDP in Australia. When the GDP is released, like in any economy, remember the GDP, the total value of goods and services, should do the trick here as well in moving the currency pair. The GDP. Now, how about the United States? In the United States, the classical ones by now, if you watch this series here, this timeless series on what influences currency pairs and so on, in the United States we have, of course, on the top of the list, the core CPI, the interest rate decision or FOMC statements. We have the non-farm payrolls, the GDP, the ISM manufacturing, and even the non-manufacturing. What does it represent? ISM manufacturing and non-manufacturing basically represent the PMIs. Of course, the durable goods orders, the GDP, so GDP, and so on and so on. Now, opposite, like it was the case with the US dollar, Canadian dollar, which is heavily dependent on the oil market, the Aussie as a currency pair, the Australian dollar, US dollar, is heavily dependent on China and on commodity prices. Thank you very much for being here. Have a great day. Bye bye.